Hey guys, it is Julie here with JT Wealth. Interest rates are continuing to rise, so today we're looking at sectors that stand to benefit. Alright guys, welcome back and thank you all so much for being here. As I said, interest rates continue to increase, so in today's video we're going to discuss that and take a look at which sectors stand to actually flourish during higher rates. Just before we get into all of that, I wanted to say thank you for the warm welcome back to the JT Wealth channel. It was really great hearing from so many of you. And for all of those asking, I am not AI or a robot. I like to think I'm just a professional and unfortunately have a bit of a monotone voice, but I'll work on bringing some excitement to it. Now, let's talk interest rates. Yesterday, our buddy Jerome Powell from the Federal Reserve announced that rates would be increased by another 75 basis points. This marks the sixth consecutive rate hike and the fourth straight three-quarter point increase in a row. This is pushing borrowing costs to a new high since 2008. These rate increases, of course, are all in the name of fighting inflation. The idea being that higher interest rates leads to less money in circulation, which then increases its value, resulting in lower levels of inflation. While overall market health is a goal, these aggressive back-to-back rate hikes can cause a lot of volatility in the short term. While Jerome Powell said that the Fed may slow the pace of rate increases, they did suggest that more big rate hikes would be coming, and that's raising fears about a possible recession next year. This caused the Dow, S&P 500, and NASDAQ to all slide. With that being said, there are a few sectors that actually benefit from these higher interest rates. So we're going to take a look at those sectors, why it is that those rates benefit them, and show you a few quick examples of stocks within them. The first sector that can do well in a high interest rate period is the financial sector, specifically banks and brokerages. As they can charge higher interest rates for their products, they can see increasing profit margins. One headwind that they may face in the short term, however, is that there may be a decrease in borrowers willing to pay those higher interest rates. But despite this, mortgages and loans are always needed by consumers. Now, a few examples of stocks within this sector would be JP Morgan Chase. Trading under the ticker JPN, they're priced at $126 per share. The company also pays a dividend with a yield of over 3%. Wall Street analysts currently rate their stock a moderate buy with an average price target with a 9% upside. Recent ratings range from a hold with a downside of over 4% to a buy rating with an upside of over 21%. The Bank of America stock, they trade under the ticker BAC, priced at $35 per share, also paying a dividend with a yield of 2.35%. Analysts rate their stock a strong buy with an average upside of 12.5%. With the most recent rating coming in just yesterday, a buy rating with an upside of over 9%. And US Bank Corp. Their stock trades under the ticker USB, priced just above $40 per share, also paying a dividend with a yield of 4.34%. Their stock is rated a moderate buy from Wall Street analysts with an average upside of over 24%. Their most recent rating also comes in yesterday with an upside of 15%. Another sector that can withstand higher interest rates is the insurance sector. Now, insurance companies mainly make their money from two different sources, one being insurance premiums, which have been on the rise this past year, and also the return on their investment, when they invest those premiums until they need to pay out money. Now, obviously, with rising interest rates, they can earn more on this, increasing their profit margins. Some examples of insurance stocks are MetLife. Their stock trades under the ticker MET, priced at $72 per share. They pay a dividend of 2.7%. Analysts rate their stock a strong buy with an average upside of 5%, with the most recent rating coming in today with an upside of 17% from Morgan Stanley. Allstate Insurance, trading under the ticker ALL, they're priced at $120 per share with a dividend yield of 2.6%. Wall Street analysts currently rate their stock a moderate buy with an average upside of 17%. They did have a sell rating come in yesterday with no price target, along with a few holds this past month, but some buy ratings with upsides as high as 30%. American International Group, under the ticker AIG, they're priced at $57 per share and also pay a dividend with a yield of 2.2%. Analysts rate their stock a moderate buy with an average upside of nearly 13%. Their most recent rating came in today with a buy rating and an upside of 14%. And the United Health stock that somewhat straddles the insurance and healthcare sectors. They trade under the ticker UNH, priced at $544 per share. Analysts rate their stock a moderate buy with an average upside of 9%. Looking at their ratings, on the low end we have a hold with a downside of 3.5%, and on the high end we have a buy rating with an upside of over 13%. And that stock segues us into the healthcare sector. Now, interest rates might not affect them as much, but what makes them stand out is that they can be fairly recession resistant. As consumers may be cutting costs in a lot of areas, healthcare is one that they rarely do. So stocks like CVS can flourish during this time. Under the ticker CVS, they're priced at $97 per share. Analysts currently rate their stock a strong buy with an average upside of 24%, with recent ratings following their earnings report coming in yesterday and today ranging between 16 to 23% upside. Now, there are several other industries that are considered very recession-proof, but we'll get into those in another video. Today, I just wanted to highlight a couple sectors that can flourish with rising interest rates, as things can seem pretty doom and gloom in the market lately. You guys know I always love hearing from you, so let me know your thoughts on these sectors in the comments down below and some of your favorite stocks within them as well. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock. They're just meant for entertainment and information purposes to maybe kickstart some investment ideas, but please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, don't forget to hit that thumbs up button. Have a fantastic day, and I'll see you back here next time.